Nvidia's earnings failing to impress investors despite beating the already very high expectations. The results almost overshadowed by headlines related to this year's mega IPOs, with SpaceX unveiling its filing. Let's discuss with Gil Luria, head of technology research at D.A. Davidson, and Joe Kaiser, Switchyard Partners CEO and founder. Joe has built and backed companies through multiple IPOs, worked in solar, worked in AI. And Gil, let me start with you, since you're playing the away game here today. What do you make of Nvidia earnings? It seems like they're crushing it, but the bar is just so high and they've already gotten so big.
That's right. They did crush it. They'll continue to crush it. The highlight of the earnings yesterday was Jensen Huang dunking on the competition. He made a point to dunk on AMD and Broadcom by saying there's an entire segment of his business where they don't have any competition. Apart from the companies that dabble in their own chips, the entire rest of the market is 100% Nvidia. Then he proceeded to dunk on the CPU companies, Intel and AMD, by talking about the fact that in a year, they're going to grow their standalone CPU business from nothing to 20 billion. And then he ended by dunking on Cerebras by saying that the market for hyperspeed inference is actually tiny, in spite of the fact that he's also in that market. So Nvidia is doing really well. It's the core of the AI trade, and it'll continue to be the core of the AI trade.
The Jalen Brunson of corporate America, just dumping on everyone. Joe, if I can bring you in, I actually want to kind of relate this to SpaceX, because it's a point that Mandeep Singh made of Bloomberg Intelligence that I thought was good. You have SpaceX valued at $2 trillion. It's going to be priced, theoretically, if it gets there, at 80 times sales. It's growing at something like 20%, whereas you have Nvidia priced at 17 times sales, or forward earnings, and it's growing at 85%. How do you digest with these giant tech companies coming to market about what you're actually willing to pay?
Well, Danny, it's astounding. And then you put OpenAI and Anthropic on the heels of that, and their growth rates are extraordinary as well. I mean, just highlighting something else that Gil, or adding on to what Gil was talking about, like the networking business inside of NVIDIA was lost in all the conversation. They're at $15 billion in revenue for their networking equipment. That puts them on a run rate equal to Qualcomm. I mean, and that's just an also-ran business inside of NVIDIA. So Jensen talked about the AI factory at the GTC, and it's coming to life.
By the way, so they're expected to have $370 billion in annual sales. So at $5.4 trillion, they're only trading at 14.5 times.
Okay, thank you for that.
Sales, and about 20 times forward earnings,
yes,
right?
You're right.
On a 12-month basis.
Again, compared to SpaceX, which would be 80 times sales.
Joe, Jensen continues to dangle, though, this $1 trillion figure for revenue, right? Is that 25 through 27? Are they on track to hit that?
All signs point to yes, Matt. I mean, it is astounding that Jensen can just trot out this crazy number that year over year is 100% bigger than he said the year before, and he's on a runway to hit it. And Matt, I think the other interesting component here about their moat is the lockdown that they have on TMC production. The moat is not silicon. The moat is the packaging, and as a consequence, it's clean rooms is where the packaging occurs. They are consuming almost 2/3 of all the packaged chips coming out of TSMC. So if you're trying to get Google chips, if you're trying to get Trainium chips from Amazon, how are they going to make them?
They all get made in the same place, which is the most interesting thing there.
Yeah, exactly, and there's the supply chain risk within that too. Gil, if I can bring you back into the conversation, I know you have some thoughts on the SpaceX IPO too, and I think one of the ones I'm most interested in hearing is the $28.5 trillion supposed TAM, total addressable market. What did you make of that? How do you think we can get to that kind of figure for SpaceX, and can we?
Yeah, I mean, the nature of SpaceX is that it's really about the dream, right? The mission statement includes statements about humanity becoming multiplanetary, extending the light of consciousness into the stars. So that sounds like multi-trillion dollars to me. I actually had this conversation with Elon Musk 13 years ago. I asked him about taking SpaceX public. Tesla was public at the time. it was only a $5 billion market cap, and it was already giving him headaches. So he said, no, I think I'm going to keep SpaceX private for a while. So here we are 13 years later, and they're both going to be trillion-dollar companies. So believe Elon when he says the opportunity is big.
Joe, can they get there to a $2 trillion valuation? I mean, Tesla is valued at $1.5 trillion, and they don't even make and sell that many cars, right? It's all about the dream for Tesla, too, and they seem to be able to support that.
Matt, the dream is grounded in reality here, though, because SpaceX is already launching infrastructure into space right now to support this data center and space model. So it is actually
But not nearly enough, right? Starship needs to be launching 100 to 150 tons of payload, and they keep blowing up. So they're not launching any commercial payload thus far, and if they did get customers to put stuff into those, they could only take up like 35 to 50 tons.
Sure. The one thing that the last couple decades have proven to us, Matt, is don't bet against Elon. So the tactical technology solutions will be solved.
I think, Gil, for me, one of the head scratchers is their XAI business, because they are burning through cash. And in fact, SpaceX has really big GPU clusters, but they're renting more of that to Anthropic than what they're actually using themselves. How should we think about the AI business behind SpaceX and its potential growth?
Yeah, so up until now, this one tells us that it's been a huge money drain on Tesla, but that turns around because they're going to start charging Anthropic $15 billion a year for that capacity. What happened is Elon's great at building these colossus data centers, but Grok hasn't been popular enough in order to fill them with inference demand. So he has this excess demand that he can sell to Anthropic, pay for the investment while Grok gets better, and at which point he can give Anthropic a 90-day notice to kick him out and use that capacity for Grok. So bigger picture, to understand what Elon does, he divides the business into three parts. There's the money-making business today. For Tesla, that's cars. For SpaceX, that's Starlink. There's the business that's on the come. For Tesla, that's robo-taxi. For SpaceX, it's data centers in space. And then there's the dream. For Tesla, that's Optimus robots. For SpaceX, it's life on Mars. All these things are related, but all these things allow him to get a valuation that's much bigger than the existing business would justify, because there's a shorter-term promise and a longer-term promise that investors can get excited about.
But Gil, if we have a company, I mean, I don't know what the exact estimates are for the full year, but let's say 20 billion in revenue and $20 billion in losses. If a company that loses $20 billion on an annual basis can be a $2 trillion valuation, don't you start to sell this market because that's the top?
Well, there's three really exciting companies, and they're all going to IPO this year. And all three of them lose tremendous amount of money, but all three of them have a TAM that is in the multiple trillions. That's obviously these guys, OpenAI and Anthropic. And the market is hungry for this type of growth. The market believes these companies are going to be the engine of growth going forward. Now, what's going to happen is these IPOs are going to take the oxygen out of the room. They're going to make everybody else look bad because of their growth rate and the size of their opportunity. So investors will be willing to accept these losses as long as the trajectory for growth and the size of the opportunity is great. That's part of the dream that investors have right now, and that's the opportunity they're looking for having a really big opportunity. These are the three companies that are going to provide that to the market.
Joe, I got to ask you about OpenAI because I don't have a big picture analytical view, but the people that I talk to on the ground who are using AI deeply have switched to Anthropic, right? Joe Weisenthal, when he's building code for Odd Lots, he's doing it with Claude.
Right.
how is OpenAI doing in the sort of Gemini, Claude, Grok, ChatGPT horse race?
Yeah, Matt. So obviously most of this data is private. So it's a matter of piecing it together. And OpenAI's growth rate from 23 to 25 is pretty extraordinary. It went from 2 billion to 20 billion in revenue.
And they were the only game in town, though.
Extraordinary.
Yeah.
But a couple months ago, we saw it. The flip occurred with the release of the new Anthropic tools, Code in particular. And now Code has double the users of Codex, which is extraordinary. So if you think about what software are engineers using to build product, that is a two-horse race, and Code is winning. Anthropic is winning the race today. The Anthropic's growth rate is much faster at this point than OpenAI's, and I'm sure that's a little bit of Sam's motivation to get out of the gate sooner.
I was going to ask you that, Joe, as someone who has taken companies public, how important is it for OpenAI to get there before Anthropic, or even SpaceX, for fear that oxygen gets taken out?
Sure. Well, I think OpenAI just needs the capital at full stop. I mean, they are talking about $600 billion of infrastructure deployment through the rest of the decade. So they just need the capital. That is definitely the primary motivation. But SpaceX may be less, but they must get out before Anthropic.
Gil, let me put a hypothetical to you. If OpenAI continues to lose this race against Anthropic, is that a problem for the entire multi-trillion-dollar circular economy that's all based on OpenAI winning?
If Anthropic runs away with it, yes. But just over the last 6 months, we've gone from OpenAI having a lead that looked insurmountable to Google Gemini having a lead that looked insurmountable to Anthropic taking the lead. When we're actually looking at the numbers coming out of usage in enterprise, the usage of OpenAI, the enterprise, is actually almost as big as Anthropic. Anthropic grew it very quickly, but most companies actually want to use both tools. And part of the reason is that Anthropic didn't have the compute to deliver to this demand. That's why they're scrambling to get compute everywhere, where OpenAI was ahead of the curve in securing compute. So if they have a slightly better model, if they can deliver more compute, they'll come right back into the lead. So it's too early to call, not to mention Google Gemini over the last couple of days presented a very compelling case why enterprises should use that model, and enterprises are keeping Google into the mix. The race is still completely wide open. And to Joe's point, that's why OpenAI needs to go get that capital, pay for the compute so they can deliver it, so they can stay in the race.